Hi everyone. Today let's talk about CCIV and Lucid Motors. CCIV is a special purpose acquisition company, or SPAC, which is one of the hottest trends right now on Wall Street. And it's something I hadn't really heard of until pretty recently, but it seems like there's quite a lot of them. And these are generally trader stocks, and I don't really comment on them most of the time, but this one seems to be a potentially good play, as it is merging with Lucid Motors, which is a company that seems to have some potential for long-term growth. So first, I will talk about what a SPAC is. Then I will talk about some of the commentary around this potential merger and recent news, as well as the pros and cons of buying this stock. Then I will go to the Lucid website and talk about their actual products. Then I will go over the price action as well as the options chain for potential trades. On this channel, I go over my passive accounts as well as my active trading accounts and my general thoughts on specific stocks and news in the markets. So if you like trading stocks and options and making money, definitely like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. So what is a special purpose acquisition company? Basically, it's a company where a lot of people pool their money together and they look for a company to buy. The share price starts around $10, and they hope that it will go up based on what company they are going to acquire and for what price. They say companies like WeWork, which was set to go public in 2019, then their IPO imploded and they are now under new management, and they're potentially talking about using a SPAC to go public. Multiple companies have been using SPACs to go public, as it makes it much easier for the company to IPO. Going through all the work to actually IPO a company and the uncertainty of actually going public is pretty difficult for companies, and since the SPAC is already publicly traded, it makes it easier for these companies, and roughly 200 companies have gone public this way in 2020, raising around $64 billion. Companies like Virgin Galactic, DraftKings, of which I am a fan, Open Door, and Nikola Motors have all gone public using SPACs so far. There's already quite a few SPACs lined up for this next year, to include Butterfly Network, which is backed by Bill Gates, and possibly 23andMe, which is in talks for a $4 billion deal. So what exactly is a SPAC? Well, it's essentially a share company set up by investors with the sole purpose of moving money through an IPO to acquire another company. As I mentioned before, you gather a bunch of investors, they buy shares of this shell company, and then they go and look for a company to acquire, and in this case, they've settled on Lucid Motors. Lucid Motors is, of course, an EV company, which stacks the two trends together. So SPACs are a trend, currently working their way through the markets, and the EV sector is the hottest sector by quite a long ways. So putting these two things together seems to be a match made in heaven, and it's generated pretty good returns for those who have participated from the beginning. They go on to mention here that a SPAC is purely a shell company, as they have no products, they don't sell anything. The only thing they actually have is cash raised from its own IPO, and this is what makes them speculative. They go up and down based on what company people think they're going to merge with. So for example, if CCIV were to announce tomorrow that it's broken off talks with Lucid Motors, the company would plummet down to probably around $10, as that seems to be the baseline for these companies. They reiterate what I mentioned before. SPACs are usually priced at $10. That money goes into an interest-bearing trust account until the SPAC manager finds a company to merge with, and then they go through with the acquisition. The SPAC members have a voting right to approve the deal, and then they swap their shares for shares of the merged company. The SPAC itself usually gets around 20% of the final company, meaning that people inside the original company still maintain around 80%, and they can sell shares in the future if they need to raise capital, but this is just a short-term way to go public, and they can always release more shares in the future. So let's talk about why CCIV is going up so high right now. And it's because they're in talks to acquire Lucid Motors. Lucid was founded by a former executive with Tesla, and of course the fact that it's somewhat related to Tesla gives it a big boost. And they mention here if the deal goes through, they expect CCIV to continue to go upwards, as Lucid intends to launch their $169,000 electric vehicle this spring, which means they're very close to launching their product and starting to generate revenue. As this vehicle sells, they will then expand their technology into lower priced vehicles, which is a similar path to what Tesla did in selling their most expensive, highest margin vehicles first and using that capital to expand their line to lower margin cars and increase their volume. Now, they've been talking about this merger for quite a while, going all the way back to January 11th, but it seems even more likely now here on February 16th. But of course, it is not confirmed yet, and there is still certainly some risk here. Looking at the reasons to buy, if they do merge with Lucid Motors, it seems like Lucid definitely has a decent business model. As I mentioned before, they're going to start with their most expensive version, and then they will start selling their cheaper models at the base model, the Touring model, and the Grand Touring Edition later this year and into 2022. They say that the Air will top the Tesla Model S with an industry-leading 517 miles per charge and a 0 to 60 in just over 2 seconds. Air, being the most expensive model, will have 1,080 horsepower, and they say again he will use these profits to power the cheaper sales of mid-40,000s electric cars and moving into the $25,000 mass EV market by 2026. They say Lucid could generate a massive $900 million in revenue in 2021 by selling 6,000 Airs, and he thinks it's possible they could top 25,000 units in 2022 as the cheaper versions become available. Of course, there are reasons to not buy this company. So far, these are all rumors, and they're assumed. If CCIV does not merge with Lucid Motors, as I mentioned, this stock could very quickly go right back to $10, shedding a massive percentage of its current value. Looking at their advertising here, they say all of the same things: 517 miles, starting around $70,000, and 1,080 horsepower. And the car itself looks pretty nice, and their advertising looks good as well. Here, looking at the cheaper version, you can see it has 480 horsepower, around $70,000, and a projected range of 406 miles, which is still very good for what's considered the cheaper version, although it's not very cheap at $70,000. Continuing on here, you can see they keep the same trend in website design. Similar to the Tesla, they have all the batteries in the floor, helps keep the car very stable. Charging network with 900 volt charging. This is pretty important because it does speed up their chargers dramatically, as that is generally the complaint with EV cars, is that they take a long time to charge, and you basically have to hang out to do so, versus just getting gas, which takes a few minutes. It seems like they are definitely oriented towards the luxury market, where the majority of the profit margin is, but they also want to take EV technology into the sustainable realm. You can already reserve these, and they say that they can deliver basically anywhere in the world. Not sure if they can actually do this or if this is just advertising for now, but you can buy all of the different ones here up to the Air Dream Edition Limited, and this requires a $7,500 deposit, and I would assume that's for these guys down here at the bottom in the United Arab Emirates. I'm sure some Americans will buy this also, but I think they will have a tougher time fighting with Tesla here in the United States. They also include 3 years of free charging across their network, which is pretty cool. Full disclosure, I do not have a position in this company. I've considered trading it a few times, but these are very speculative, as I mentioned, and this price action is completely based on rumor. So back here it was trading at $10. Then we had some rumors on January 11th and it started rising. And it went all the way up to $36 here on February 8th. And then we got the news on February 11th over the weekend, and it rallied all the way up to $57 today. But of course, if this rumor is false, it could fall all the way back down to $10, leaving a huge amount of downside risk. Moving on to the options chain, there's quite a few dates here. I didn't expect to see quite so many when I opened this up, but you can trade the regular monthly iterations here with massive IVs. You can see the IV for just these 2 days is 302%, which is almost a $7 move here in the next 2 days, which is pretty massive, obviously, since this stock is trading at $56, representing over a 10% move in either direction, and it stays huge throughout these option chains. So looking at the 30-day strike, the expected move is down here to $22.50 at one standard deviation. And you could sell this put to buy the stock down here for $1.15, representing over a 50% drop in the stock in the next 30 days, which makes sense when you consider the fact that this is based on rumor, and if that rumor goes south, it could very easily go through those prices. In fact, you could go even higher and still get a decent credit down here at $17 at a 45-cent credit to buy the stock well over 50% cheaper. Looking at the upside here, you can see to buy these call options, they're pricing in a $15 move to the upside for the at-the-money options, meaning that you need the stock to go to $75 to make money at expiration. Obviously, you don't have to wait until expiration, but it's still pricing in a pretty dramatic move. And if you wanted to trade this extremely long term, you would have to pay $30 to buy that option, pricing in a move all the way up to $90 per share on the upside, or back down to around $20 per share on the put side. If I was confident in this company, I would probably look at the 30-day options and probably trade the $30 puts for around $3, representing a 10% return. But again, if this stock goes down, it will go right through these prices. So if you're going to take this trade, definitely buy some protection. Don't trade these options naked. If I was forced to take a position right now, I'd probably look to trade a credit spread here at $30 to $25 put credit spread. We could get a credit of around $1.30 for that trade, putting just under $400 at risk to make $1.30. Not a terrible risk reward just to be a part of this stock and still protect yourself a little bit. You could even roll these up and try to get a little bit bigger credit at the $40 to $35 credit spread. You could get $2, only putting $3 at risk to make that money. Especially if you think this merger is going to go through, it's definitely worth taking a look at. Comment down below what you think of this company. Will the merger go through, and will they be able to take on Tesla here in the United States and around the world? There's certainly a lot of risk and certainly a lot of reward that could take place on either side of this trade, and it could all be fake. The merger could fall through and a lot of people could lose money. Don't forget, this is highly speculative, and with risk could come reward. Definitely like and subscribe if you got any value out of this video. I make videos like this regularly, and I do full options portfolio overviews every other week, as well as my passive portfolio overviews and potential trade ideas. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.